الابتكار المصرفي والتحول في منصات الخدمات والفروع مع المسؤول المصرفي للشرق الأوسط وأفريقيا في قسم خدمات الأعمال العالمية IPM المحاور نفيذ منهاس.
Can I test it? Yeah, it's working. Okay. Yeah, we're ready. You can sit anywhere. Have a seat. Thank you. Hey, have a seat. Thank you. Good. Ready to start then. Are we going to get any more avid listeners in the room? Or is everyone out celebrating Christmas already? Okay. I think this is it. Right. I'm going to start first of all by saying thank you to everybody for turning up to a discussion which is quite topical, one that I'm sure many of you have heard and participated in already. It's about how is innovation moving across banking, both across channels and transforming branches. But it's a much broader topic than that because it touches in this region today the mindset change that's happening in all boardrooms across banks in the region, where we have banks actually questioning how do we now bring more and more transactions out of the branch onto our mobile channels? How do we do more predictive analytics and drive more insights that we can monetize from knowing our customers better? And more fundamentally, how do we make you as customers come onto our channels and do more with the products that we have to sell and offer to you? So I'd like to introduce our very broad and rich with experience panel we have, starting with Turki Al-Dafyan, who's a well-known digital banking leader in Saudi, Mr. Tariq Al-Salah, who's a leader in investment banking from Gulf Bank, and of course Firas Muselli, who's well known to many in the room, who heads up Infosys in the region. So I'd like to start off with a couple of questions, and I'm going to try to ask the same question almost twice to get different perspectives, and we're going to try to finish at least 5 minutes early so we can get some audience participation from this very, very busy room we have here of people asking questions. Okay? Yeah. So the first question really is around a very topical question. I'm going to turn to you, Turki, on this one. It's the face of banking is changing. where in boardrooms today there's a debate going on around how relevant is the branch. What is the future of the branch when so much investment is going into mobile channels, online banking, platforms, partnerships with technology giants such as Facebook, etc. So what is the future of the branch in your opinion?
Before I start with this question, actually, let's understand what the services and functions available in the branch is not available in the channels. After that, we can start as a beginner. For example, all the service almost is available in the channels except opening an account. When I say opening an account, it means full opening account. I think this is the only function or service is not available in the channels. I'm talking about the Saudi markets. If we have this kind of integration with the central bank and accepted by a regulator, I think it will be a good start to move forward to the digital channels. We have like a full experience end-to-end as a digital channels. I think just only maximum 3 years from now, it will be everything is digital.
Okay, I think everyone in the room would agree with you on that. Firas, the same question to you though. If I was a young 21-year-old millennial in Riyadh,
Yeah.
and I had to choose today between going to the branch or onboarding through my mobile app,
Yeah.
what's the millennial looking for from his mobile app to make that decision, in your experience?
Yeah. Maybe let me start with the joke that might be a fact in a few years from now. It's said that maybe Google might be the biggest bank now in the world in a few years from today.
Or Amazon.
Or Amazon, maybe. Yeah, you're right. Actually, the millennials now today is they're expecting more from banks. To be frank with you, I can see the crowd are more quick than the banks themselves. We're trying to catch up with the needs of the clients now. In my point of view, now the e-commerce, the internet has changed the face of the world. Actually, one of the major things is money. You know, you start with your pocket when you go to the market. So I think the expectation of all the youngsters now, and even there was a statistics a couple of banks has conducted last year, and it shows that the age of utilization or the age of the internet users has been raised or has been changed from 40 years to 55 years. So now the millennials include the 55 years people. So maybe this question is valid for this segment as well.
So it's broadening the overall.
It's broadening, yes, I agree. Yes.
So Tariq, I'm going to come on to a question to you now.
Let me address this really quick, Naveed, because this is important. Naveed, in 10 years' time, 2 billion people, that's as many people who bank today, 2 billion new people, that's the new generation, our kids, will have their first banking interaction, not in a branch, through their mobile phones. So they actually, probably, if you tell them about a branch, they wouldn't even recognize what's a branch. So that's very important in terms of demographics. And this region has a very young population. I mean, in Kuwait, we have half of the population below the age of 30 and a quarter below the age of 20. So it's a very young population. The new generations across the world will have their first banking interaction through the mobile. So it's very important to move in that direction. And I think, however, having said that, today, we talk the talk, but we're still kind of not there yet. Banks still rely on branches. Banks are still expanding in terms of branches. So they recognize the need to make that shift, and they are trying to sort of make that shift, but there's still a strong reliance on the branch network.
So can I just follow up on that? Because you're spot on in terms of how the face of banking in 5 years to 10 years will change for new customers onboarding. But you've done some really interesting work with Gulf Bank recently with the development of AI and chatbots as an advisory function. So your customers at Gulf Bank are beginning to use chatbots and advisory platforms through their mobile apps. Could you maybe tell us how that's transforming the channel completely for you?
Absolutely. Now, I mean, I come from an investment background, and when I joined Gulf Bank 5 years ago, the investment side, we dealt mainly with our affluent and private banking clients. And we had two issues to deal with. First, we didn't have an asset management function. So effectively, we didn't really have a service to provide to our clients. The second issue is addressing the channel. Our affluent and high net worth clients did not really want to go to the branch. They wanted their relationship managers to go to them. And they wanted relationship managers. I mean, if you told them, oh, I'm going to come up with this tech solution, just log on, nobody's going to even have a look at it. So we had those two issues. One, we don't have an asset management. We're a retail and corporate bank. We don't have an asset management function. So effectively, I didn't really have a service to offer them. Two is the channel was not appropriate to service my clients. They're not going to come to the branch, and I couldn't offer them directly. So that, in the old days, when you're faced with such an issue, you kind of just sit back and not, you won't be able to do much about it. But having looked around and kind of brainstormed within us, how can we get around this issue? And I think technology helped us a lot in that regards. Because to address the issue of not having an asset management function, we did a lot of research, and we realized that at the end of the day, those fancy investment bankers, thank God I'm in a technology forum, so nobody's going to get mad at me. Those fancy, investment bankers, they come to you and offer you those investment products and slap you high fees, but how much value add are they generating at the end of the day? And research shows that really not much. If you're investing in efficient markets, and if you're investing in a liquid markets, you're better off going with a passive approach where you minimize your cost and you invest for the long term. So we created an engine that would actually get to know the investment objective and risk profile of our clients and create such portfolios for them. And now to get around the channel issue, I could not offer it directly to them because they won't even have a look at it. They want someone to be there in front of them. And that's really important because today we're talking about technology, we're talking about reducing the friction point, but human element is important, and especially for the segment that we dealt with. So we wanted to keep that in the picture. So we created this platform, and we realized we're not going to get them to come to the branch. We wanted someone to go to them. So we had it on a mobile device where you can go to your clients, walk them through this platform, generate those portfolios for them in a very easy, transparent, and cost-efficient way, and you're done. And you just keep, they talk to you.
How have you branded it? What's the name?
It's called Wise Investment Service. Wise.
Wise.
And it's a wise way to invest. Okay. That's the whole kind of rationale.
I think everyone's Googling and looking for it as we speak. So I'm going to move on from that point. Fintechs. Okay, fintechs is the other word that everyone in the room has learned how to spell over the last few years and have an opinion on in terms of are they a threat or are they a partner for banks in the region. So Sama's done a lot of work recently in the kingdom to make fintechs a much more conscious discussion around boardrooms, both in universities and also amongst entrepreneurs and banks. The question I'd like to ask, probably you, Firas, I'll start with you on this, is where do you see the low-hanging fruit for fintechs in Gulf or the kingdom to come in and make an impact? Which element of banking? Is it retail? Is it KYC in retail? Is there another element of corporate banking or advisory services? Where do you see where there's a real opportunity for fintechs to come and disrupt the market with the regulator's blessings?
Perfect. Actually, I can start with the concept of disruption. Now the disruption is hitting all industries, including banking. So if we get a closer look on the end-to-end customer journey, we can find out many areas where fintech can serve. To be frank with you, I think that many areas has already implicitly converted to fintech indirectly, actually. I'll give you an example. Payment gateway. One of the areas that has been fantasized, if there is a word like this, has been fintech without all banks having attention on this. So we can see many companies has already started to serve banks and integrate with their back-end system in the payment gateway. Okay, now back. So this is happening. Actually, we're not expecting this to happen. It's a fact right now. If we go back to your question regarding which areas that can be an opportunity for fintech companies in Saudi Arabia, we need to look at the end-to-end customer journey, and maybe you're one of the best people who can do design thinking exercise and ideation exercise. We can see that the customer acquisition part, or even before the customer acquisition, marketing is very important area that can be served by fintech companies. Actually, now many companies, maybe including, let me do some advertising for you guys. I mean, in IBM, that you already have approached this area. So one of the things, marketing on behalf of banks, one of the fintechs areas that is already now offered by many technology companies. Second area is the customer acquisition, and when we say customer acquisition, maybe KYC is one of the most important areas that has been approached also by fintech company. In fact, SAMA has released a few months ago a draft of the agent banking. I'm not sure whether you had a look on this or not, but for me, I had the opportunity to check this and work on this actually. And now most of the banks are considering agent banking. Agent banking is KYC, account opening, and customer interface. So these areas has already been part of SAMA direction and SAMA thoughts right now. Other areas like service providing, upselling, cross-selling, I think this is still underway. So maybe.
So if we look at, I mean, I'm going to turn to Turkey and Tariq in a minute as well on the same question. Many of you probably have heard of Monzo in the UK. Many of you probably heard of Atom Bank, Tandem, or Revoluto in Ireland. All of these are challenger banks, new banks that have come up in the last few years. And even though they're probably not all profitable yet, but they're beginning to win lots of customers. Now, Monzo alone has just over 500,000 customers already in the UK. When do you believe there's going to be a Saudi entrepreneur or a Gulf entrepreneur who's able to set up a similar bank from scratch in the local market? Where do you see that happening? And what's the prerequisite conditions behind that?
From my side, actually, the most of the banks here, they won't invest what they did actually for that 20 years, starting from technology side, which is too expensive. But frankly, I think no one will do that. Similar, the same setup like Atom Bank, but they will do it in separate bank. It means they will have utilized the core banking or the core technology what they have, or the products what they have, and they will build like an interface. But they will have invest more for this side rather than to invest in the branches. Now I see like the last 3 years, all the biggest banks are actually investing in channels. It might be we will not see it this year, but next year we'll see the light and see the lights, starting from the mobile and even for the terminals, and even the new things. For example, the Apple Pay and Samsung Pay, they will soon, inshallah, next year in Saudi Arabia. I think it's the market has changed. And even the banks are now investing just only in banking. They start serving other services for the customers, starting like a BFM. Even when they do the apply online for the products, now they would just start with end-to-end integration, but they will they will not invest for new core banking to be like a fully digital, because it's too costly actually.
Okay, so Tariq, now turning to you, following what Turkey just said. Mobile is still the most common experience that everyone's looking for when it comes to innovation in banking. I realize your focus is very much on the investment side of Gulf Bank, but you know the Kuwait market quite well. How do you see, from a young population that you have in Kuwait, how do you see things such as platforms becoming more accessible, where banks have got open APIs connected to platforms and they're driving transactions through those platforms to consumers? How do you see the uptake of that beginning to take off in places like Kuwait?
Today in Kuwait, the numbers are very interesting because we effectively have 2 mobile phones per person in Kuwait. So that's very high penetration. Yet when you see the kind of transactions that people do on their mobile phones, for example, paying bills, they're merely 2%. And if you see the number of transactions they do online in general, whether it's paying bills or buying things online, it's very low as well, even relative to the Gulf. It's around 26%. So that's a very interesting issue, and we can interpret it in many ways, but at the end of the day, having that kind of mobile penetration and having that young population, it doesn't make sense because they're pretty much tech savvy. So I think regulation has something to do with it, and I think my colleagues have addressed this a bit. But I remember in one conference I attended a few months ago, one of the banks in Kuwait, and was speaking, and they definitely, I mean, at the end of the day, traditional financial institutions in Kuwait or the Gulf in general, they are relatively protected by the regulator. And we've heard earlier from some of the experiences of the fintechs and the startups in the financial sector. So I think that's a limiting factor that is changing fast. So today, banks realize, as well as the entrepreneurs and the startups, that we're not going to be protected anymore. We need to move fast, and we need to work together with those startups. In our experience, when we started this process in the investment field, I mean, we could have partnered with a fintech in this area. We could have had other solutions like white labeling or things like that, but we opted to do it ourselves. But now there is no excuse. You have to move fast, and things will get there. I mean, the regulators are becoming more progressive. There are some interesting examples across the Gulf in terms of setting a sandbox environment and all that. So things are moving in the right direction, and we will see more and more, especially the younger population, getting into technology. And if you're not in that area, you will be left out.
So let's talk about the one ingredient that's essential for any innovation, which is talent. Okay? And this affects all of us around this table. All of us on this panel have had days where we've had not enough talent for the business problem we need to fix. How do you see talent in MENA or MEA or Gulf as a lever that we need to work on more, and what more could be done? So if we look at the Saudi market or the market in Kuwait or anywhere in the Gulf, what do you see as areas of improvement for more talent to come out naturally from the sources available? Pin drop silence on that one.
No, I think it's I'm not as pessimistic on that because I see a lot of younger crowd, or like we see here today, and they're very much look forward to kind of jump into this area, and we're seeing a lot of good examples in Kuwait. We have many examples in terms of talabat, carriage, and even here in Riyadh, it's a vibrant environment in Dubai, and there's a lot of collaboration with international providers as well. I mean, today, even in this region where we are today, and I was hearing Mr. Fadi Ghandour when he was in ArabNet Kuwait, even if you kind of look at the international models and you sort of try to implement it in the region, that's taking things forward. So in terms of talent, I'm not, I think it's available, and we have access to international talent, and we have access to international examples. So I think as long as we have the regulation, as long as we have the mindset to embrace this digital kind of environment, I think we will be moving forward.
So does anyone think the regulator could have a role in this, to encourage universities and other centers of excellence to promote more talent in this space?
Yeah, I can take this. Actually, this question has two sides. The first side is regarding maybe the talents that is consumed and employed inside maybe the fintech and banking and banks in general. And maybe the other talents that is like that's conducting the entrepreneurship programs or entrepreneurship initiatives. I think now that most of the banks now are in contact with few universities, and I know this for a fact, to enable the university to produce more qualified and ready to touch the ground running people and talents. I think the issue here is not the education and the qualification. I think and now if you take a look to the landscape in the Gulf, and specifically in Saudi, you can see a lot of graduates and who can really serve the market. The thing is that do they have enough time to get the experience? I think also the mindset of the quick development in the career need to be part of the education, maybe the universities. Maybe people need to know that they need to have a hands-on thing, So this is as part when it comes to banks and fintech. I think on the other side, the many initiatives is taking place regarding the acceleration and the incubation of initiatives or entrepreneurs. One thing here I noticed as well, maybe we have a lot of relations outside here, Badr, STC. I think the successful entrepreneurs need to be part of these initiatives, need to be part of the acceleration program as well, because in order to teach someone something, you need to have already done this before. So I think there should be a modification on the structure of these accelerators to incubate or to attract some of the successful entrepreneurs that has been done something in the market. So this is
I think
actually I will add something to that.
Turkey?
Yes, actually, the majority of the big companies here are banks. They did like a kind of program for the graduate student. Actually, they do the interview with the student, and from there they join us as a bank or whatever as a program, which is have a 1 year, 6 months of that to have like special courses, specialist in the finance and technology and everything, and the 6th month it's have like a rotation for all department, just have a full picture of bank or whichever as a company, which is giving them more insight about the information. But I will add something for the adaptation, what Mr. Khalid, Tariq, he added. I work one of the banks here. You were surprised that the number of active users, what this is the method, what we call it as a digital, is doubled for 2 years. For 2 years, if you compare the numbers from now, before 2 years, we were surprised. The number of active users doubled, which on the majority of them, they are youth, by the way. It means there is an interesting for technology and mobile. And if you see the comments and all social media, you're surprised. You want everything in digital. Even they don't want to talk to their agent. That's why we start building the services, starting like a live chat to discuss whatever from the organization, even for the startup companies like Hunger Station and the different applications. They start building something called live chat. They start now removing the agent from the picture. They now starting to have live chat, and you will start to have a chatbot, for example, in the future, which have more capability and they have like a bigger picture to answer more customers actually. But that's a number of adaptations really huge in Saudi market.
So look, moving on to another topic then, because I'm conscious of time, because I want to ask some people in the audience to ask a few questions as well. Data still is the most important asset that a bank has. Now in Europe, next year, we're going to see PSD2 arrive, which many of you have heard of, and those of you in the audience who don't know about PSD2, it's essentially a new protocol that the European Union is introducing for all banks in Europe, particularly in the UK, where banks are going to be, if they are requested to share their customer data with a new independent provider, they will be forced to do so. This means that my behavior as a UK resident could be provided to any new entity that wants to set up a service that could provide equivalent banking services. Okay? So data still is key. We've got the regulator to thank for no PSD2 in Saudi today, or UAE, or Kuwait. Okay, so thank you, Mr. Regulator. Now, data still is important, but what is happening in the Middle East, and I've seen this in Turkey already, that Facebook is becoming a regular channel for selling and promoting products such as small personal loans, up to $5,000, etc. How do you see that opportunity using the giants like Facebook or even Google or maybe even Amazon if they get access to the markets, or even Noon in the UAE? How do you see that opportunity becoming a new transformation for banks in the region?
Okay, can I take this? Actually, maybe this has to do with understanding the main obstacle behind reaching people on the social media. Actually, I think reaching people is not the obstacle. Again, as you mentioned, we know. I mean, you can reach everyone now on Twitter or on Facebook or LinkedIn. Now, I think the question and the true exercise that need to be conducted by most providers, banks or telco, whatever, is how to shortlist your customers and how to send the right offer to the right people in the right time, and maybe right place as well.
Yeah.
So I believe that back to the data and analytical question, I think now the predictive analysis is more, and the AI is the real challenge that banks need to tackle. And here you need to understand, in order to send the right offer to the right people, you need to have the right algorithm. The problem, this is not a technical issue. This is a business, is a pure business thing. You need to understand who you need to tackle, when and how, and then use the right tools in order to reach them. Concepts of geofencing, beacons are now very much dealt with now in the industry.
Most customer journeys are beginning to embrace them now.
Sorry?
A lot of customer journeys that banks are producing have beacons and geolocation factored into it.
Exactly. Again, if I locate someone or one of my customers, I need to understand, I need to figure out what I need to offer. Like someone is going to a car agent in order to buy a car, and I have beacon in this car agent showroom, then I need to understand what's the profile of my customer, what he tends to buy, what is his qualification, and maybe push to him the right offer of maybe loan or car loan in order to gain him at this very critical point of time. So. Okay. Again, predictive, I think, is more into, again, database is one thing. Now, all of us knows that the database is there. Data warehousing is already built. But how to deal with these data warehouses in a more predictive and rightly predictive manner.
So I want to keep drilling into this, because I know we're probably only got about 10 minutes left, and we're going to take 5 minutes to ask the audience if they have any questions as well. But there's a new piece of thought leadership coming out in Europe and America, which is, why do you want to be a bank? Because if you look at the financial performance of Bank of America or any of the top UK banks versus the Googles, the Facebooks, the Amazons, you look at the return on equity they've given their shareholders, the technology giants have outperformed the banks by a factor of 10 minimum. Okay? So the question really is, why be a bank today? That's my question. So if we can, is there an opportunity to say, if we could have a platform as a bank in which I have got digital ears, so I'm listening to what my customers want, and I'm applying machine learning and AI to Firas's points, in which I can now understand with an algorithm what my customers want without branches, without so many contact center agents. And I can, in an online platform, begin to offer products available on channels such as a mobile, okay? And the only thing I'm actually monetizing and converting into revenue is the commission on the products I sell and subscription to those customers that become part of that platform. How far do you see that vision in this region today? Because this is being discussed now in Europe and America, which around PSD2 and disruption that's coming behind that, which is, will banks remain as banks? Will they be called banks? Or will they become data aggregators and data providers to other parties that have use cases linked to KYC, loan origination, investment banking, chatbots? How do you see all of that discussion? How far do you see that still in this region? Anyone can answer that.
Okay, I'll take this.
Let me just give you
generic question, actually.
the short answer, Naveed, and I don't have a fancy answer for your question, but I think trust is very important. And even today for customers, for clients, the level of trust with banks is very high. So that doesn't mean we have to stay where we are. We definitely have to kind of push forward. We have to innovate. We have to compete. We have to integrate with those, the fintechs. But I think we have from a customer point, and I think there's a lot we need to do in terms of focusing on the customer journey and trying to innovate the way fintechs and maybe integrate more with the fintechs. But trust is a huge element, and that's important from a customer perspective, and that's important from a regulator perspective. So you have a huge advantage, but that will be eroded if you don't do much about it. You have to kind of innovate and continue to innovate in order to stay ahead and leverage on that. And today, Naveed, the thing is, clients don't look at things separately. I mean, you can deal, one of the gentlemen was asking earlier, I have 5 different cards and I have, now we're talking about the omnichannel, and we're seeing this even on a limited scale with our investment platform. The same platform, my relationship manager walks my client through it. They want to see it on their mobile. Even if they decide to walk to the branch, they can kind of navigate from one point to another seamlessly. That's very important to have that omni-channel in place. So you have to kind of leverage on that trust, provide the customer experience, and that's the way to go. And I think the banks and the traditional financial institutions, they have a huge advantage, but they can't, you have to continue to innovate.
Okay, so I'm going to use that as my platform to ask the audience questions with the word trust, because I think you're spot on. In this region, trust is very important and very personal as well. So we've got about 2 or 3 minutes left. Is there anybody brave enough to raise their hands and ask the panel a question that could change the face of banking in the region forever? Please go. Could you introduce yourself?
بس في ميكروفون ولا عليك.
I am Adil Bahaddad, Associate Professor at King Abdulaziz University in Information System. My question is, what is the quality perspective related to the e-commerce in Middle East and in GCC region especially? And how can we use the quality for increase the level of acceptance, increase the level of trust, increase the level of adoption for using the e-commerce and e-business in GCC region? Thank you.
So the question focuses on the quality of the platforms available for e-commerce and their adaptability and their uptake.
I'm not looking as a platform rather than to be as a data, because actually data is the most important for anything, actually. You can build the risk of the customer, you can build everything based on the data. The problem with the e-commerce in the market, they build it based on the customer input, actually. It's not verified from another organization, which is a government or banking or whatever. The e-commerce, they build his he built his view based on the number, based on the customer, what he entered when he doing the profiling of his profile. Frankly, there is no corporate between banks, or at least the government, and between the e-commerce. If you do that kind of things, you can build the know your customer, and even you can build even scoring system, which is support the e-commerce to have a right decision for them, actually.
To answer your question? Good. Anyone else? Got one hand raised at the back. Can someone get them a microphone? And I think this will be the last one because I'm conscious we're out of time now.
Hi, I'm Shihab from Riyadh Bank. I just want to ask them about the fintech. Fintech, we know that they are a big threat in banking. So how is banking planning to adapt or to get ready for the fintech in terms of their solutions, enhancing of the solution or the services, because fintechs, they might release one solution that can kill easily the bank. So,
can I start with that one?
Yeah.
Okay. So sorry, I didn't catch your name.
Shihab.
Shihab, that's a great question. So depending on which side of the fence you're standing, I believe most bankers now don't view fintechs as a threat. They view them as partners. Increasingly, they view them as partners. And there's categories of fintechs. You could argue that a new venture entity set up by Amazon is a threat. But a small startup with a smart KYC use case that they're willing to share with other banks is not a threat. That's a partnership opportunity. So it depends how you categorize the fintechs.
Now, for example, in the UK, there is a fintech called Revolut.
Yeah, the Irish
Yes,
bank.
yeah, the Irish one. Revolut, now they are planning to get a license to become a bank. So they managed to become from a small fintech to being a bank in the future. So they can eat a big share of the banking industry and become either a bank or get more customers from banks. So how
the way the UK banks are dealing with Revolut or Monzo is that, first of all, if you look at the investments, I know Lloyd's investments intimately because I was there about a month ago. They're spending almost $1 billion in just renovating all their channels to be ready for those challenges. They're opening up all of their platforms with open APIs so they can partner with Revolut or Monzo in any space possible. And let's not forget, the banks have something very important as an asset that the fintech doesn't have. And that's called a customer. The banks already have the customer. So I think the battle is going to be on how banks continue to retain their trust with their customers, and the fintechs will continue to innovate. And between that, the winner will be the customer. So I think we need to stop there, because I can see people waving at me that we've run out of time. So thank you for the question. Thank you.